Can you really have the best of both worlds with cryptocurrency and stable income? Discover the exciting yet risky investment strategy of the NEOS Bitcoin High Income ETF, BTCI, a fund that combines Bitcoin exposure with US Treasury bonds for a unique investing experience. Welcome to our deep dive into the NEOS Bitcoin High Income ETF, or BTCI. This video will explore BTCI's unique blend of 20% Bitcoin exposure and 80% US Treasury bonds, designed to offer high, stable income. However, does this approach limit your gains in a Bitcoin bull market? We'll break down the structure, performance, and risks of BTCI and why it's rated as a hold despite its innovative strategy. In this video, we'll analyze BTCI's investment strategy, focusing on its use of covered call options and the implications for dividend yields and potential capital growth. You'll gain insights into how BTCI compares to traditional Bitcoin ETFs and other competitors, like YBTC and YBIT. We'll also highlight the risks tied to Bitcoin's price fluctuations and the impact of changing interest rates on returns. The NEOS Bitcoin High Income ETF, BTCI, presents a distinctive investment approach, effectively blending the volatility and potential of Bitcoin with the stability of US Treasury bonds and strategic options trading. At its core, BTCI's primary goal is to yield a stable income stream, boasting a striking dividend yield of 38.38%. The structure is designed such that 80% of the fund's portfolio is tied up in US Treasury bonds, providing the necessary collateral for its option strategies, while 20% is exposed directly to Bitcoin through investments divided between the VanEck Bitcoin ETF and the iShares Bitcoin Trust. This allocation stands in contrast to other Bitcoin-centric ETFs, which often chase pure price exposure. Given its blended structure, BTCI appeals to investors seeking less volatility than direct Bitcoin investment, but are willing to forego some upside potential in soaring bull markets. The high yield, however, suggests a trade-off. The fund's strategy successfully capitalizes on Bitcoin's ascendancy while mitigating downside risk, yet it may underperform pure Bitcoin ETFs during sharp market upswings. Despite offering a secure income via its extensive Treasury bonds holdings, BTCI's investment appeal is nuanced. The fund has outperformed similar strategy ETFs in 2025, showing robustness amid fluctuating Bitcoin prices. Yet BTCI lags in dividend yield compared to more aggressive counterparts like YBTC and YBIT, whose yields soar above 60% and 80%, respectively. These competitors capitalize aggressively on Bitcoin's market movements to maximize immediate returns. BTCI's history of dividends reveals stability that is currently witnessing a downturn, pointing to a broader trend of declining payouts, likely spurred by macroeconomic conditions affecting bond yields. Still, BTCI's growing capital inflow indicates a rising investor interest, possibly due to appreciating Bitcoin movements post-July 2025. As a balanced approach to Bitcoin exposure, BTCI positions itself uniquely in a competitive ETF marketplace, catering to investor segments focused on stable returns over speculative gain. Investment in BTCI is not without risks. Chief among these is Bitcoin's unpredictable price trajectory. With macroeconomic factors and regulatory shifts contributing to Bitcoin's price volatility, the ETF's coverage strategy may face pressure under declining Bitcoin conditions. Moreover, US Treasury yield fluctuations, steered by Federal Reserve monetary policy decisions, heavily influence BTCI's performance. As the Fed adjusts interest rates, the impact on Treasury bond yields and liquidity becomes stark, affecting BTCI's ability to sustain its dividend payouts via strategic bond leverage. Technically, Bitcoin's pricing analysis signals potential support levels that, if breached, could undermine BTCI's position, prompting caution. Despite these risks, BTCI's structured strategy offers a moderate risk-reward balance that can appeal to investors seeking both income and exposure to potential Bitcoin growth. Current market conditions suggest a prudent hold stance on BTCI, with the recognition of evolving market dynamics that could shift this recommendation. In conclusion, BTCI embodies a blend of innovative financial engineering and strategic foresight, offering an alluring prospect for income-driven Bitcoin exposure. While the fund positions itself strategically with the promise of stable returns underpinned by high dividend offerings, it bears intrinsic limitations tied to its option strategy, curtailing the full benefit of Bitcoin's bullish runs. The fund's intricate structure, relying on Treasury bonds as collateral, may entice risk-averse investors looking to buffer against direct Bitcoin volatility. However, in an era of rapid Bitcoin growth, The allure of pure Bitcoin ETFs, such as the iShares Bitcoin Trust, becomes evident, promising unbounded upside, an appeal BTCI cannot fully deliver upon. Ultimately, while BTCI is meritorious for its robust strategies amid a turbulent cryptocurrency landscape, current analysis supports a hold assessment, projecting cautious optimism amid evolving market forces and ever-present crypto-driven uncertainties. For diversified portfolios, BTCI can serve as a stabilizing anchor, yet its real traction lies in its integration with broad market strategic outlooks and investor risk tolerances. To summarize, BTCI offers a unique investment approach by combining Bitcoin exposure with US Treasury bonds, aiming for stable income rather than tracking Bitcoin prices. While it outperformed similar ETFs in 2025, its upside is capped in strong bull markets due to its covered call strategy. Given current market conditions, BTCI is rated as hold, offering both potential and limitations. What are your thoughts on BTCI's approach to balancing risk and reward by blending Bitcoin exposure with US Treasury bonds? Are you more inclined to invest in a fund like BTCI with stable income, or would you rather go for pure Bitcoin ETFs like IBIT? Let us know your investment strategy in the comments below.